Might we have our first ever continuation indicator on the Indicator Profile Series? Stay tuned to find out. And the answer is no, unfortunately. You can't just go looking for things like this. They either pop up or they don't. But this is the trend continuation indicator, but it's not what you think it is. But it is a good indicator to put in your toolbox. And that's what we are doing today. Should be a nice short one this week. But let's move on. If you're brand new, please enjoy the video, but it's not going to make a whole lot of sense to you, but that's okay. Go to nononsenseforex.com, read that first page, watch that first video, and you will be well on your way. For the rest of us, let's get into the specs of the trend continuation indicator. The year this was created was 2002. Does fit in that 1996 and on threshold that we like to see. This is another indicator by MHP. It's the second one we've done from him. His name is the letter M, the letter H, and then the word P, P-E-E. If that was my last name, I would change it. For the sake of my children, if anything else. But anyway, moving on. This is a simple confirmation indicator, a very simple 2 lines cross confirmation indicator. We have seen all of these before. But if you go to the blog, you will notice the mechanics are different. A lot of these may look the same in spirit, but they operate in very different ways. Now, as far as this being an exit indicator, I couldn't really tell by looking at it. Dan's going to lean towards no, so let's just go ahead and defer to Dan on this one and say this may not be your best option for that. So let's look at it. Pretty darn simple. Your light blue line is your signal line. So anytime this crosses and closes above the magenta over here, that's going to be a long signal. And that's where you'll get in. And then conversely, short the other way. Anytime you have 2 lines cross indicators, the one thing you really don't want to see are these little things right here. I call them lips. To where you get a signal and then you immediately go the other way. Those are always going to be losses. However, they're typically not big losses. And if you add other components onto this, which is what you're going to do, those are the ones, these little lips here, these are the trades that typically get filtered out. So it's not what you want to see on the surface. And I think a lot of you who test indicators are used to seeing things like this and saying, uh-oh, this gives you a lot of losses. Well, just remember, these little in and outs are the ones that typically get filtered out as you add pieces on. So just a little bit of a lesson there for you as we go forward. But that's really all there is to see. Pretty easy. So we can jump right into the testing now. Now just remember, if you don't like the way we test, well, test these yourself. That's what you're supposed to do anyway. Our testing results are simply guidelines, nothing more than that. And also understand in this video down below, in the description, you are going to get the link to my automation blog that has a video on how to test these yourself on the MT4 strategy tester. And then the link to the blog, which we always give you, that really dives into the settings. And this is important because there are about 4 or 5 settings to this thing, and you only need one. You should ignore the rest, and you're going to need to know what that is. Dan has done the testing on that. And then a place to go download this yourself. So let us move forward into the Euro USD, and I've got to tell you, you can probably do better. On the daily, this was the best we could achieve after the tweaks. Better on the 4-hour, but we've showed you so many better examples here. This may not be the best place to start for pure Forex traders. But again, this is just one pair out of 36 we trade. So always remember that going forward too. Now with gold, you're going to see a big improvement. A really nice place to start for daily gold traders. Might be not enough trades for your liking to start out with, considering that number is also going to go down. But a nice place to start. And for 4-hour gold traders, which I only thought we had a few of you out there, there's more of you out there than I thought. So you're going to like this. Not the best win-loss ratio, but really nice ROI, even on the default, and a healthy number of trades as well. So even though some of these indicators might fall short on certain areas, they actually overperform in others. That's just how it goes. Moving on to the S&P. Considering the S&P averages 11% a year, and as somebody who might want to turn pro one day or just simply wants to outdo the S&P and then brag to your friends, this is a really, really good place to start because remember, as you add pieces, this number is going to go up. So nothing too much to write home about here. A nice win-loss ratio, but I do like this though. This is definitely something indices traders should be testing out. And then finishing off with Bitcoin. After the tweaks, a very nice result to start out with. I don't know how you're going to feel about 22 total trades in the year, but to have 18.3% as your starting point, that's a really nice place to start. And I guess the one takeaway for this week would be really on Bitcoin, on the crypto market in general. Now that we're coming towards the end of the year, we have gotten a really nice sample size in 2022 that I don't think we got in previous years because you got to see both. You got to see crazy moves up and down, and you also got to see long periods of stagnation. You know, before that, pretty much every trend indicator looked pretty good on Bitcoin. You know, with 2022, I think you got to see a much clearer picture of what to expect going forward. Because if you follow my 10-Minute Contrarian podcast, you know we think it's going to be Shitsville for a while. So there's going to be a lot of fear when it comes to making moves on crypto. But when moves do get made, they get made. So when you're testing your own indicators for crypto, you know, I always say with any indicator, go back a few years. You might want to measure a 3-year time frame with a 1-year time frame and see what you get. Because unless you think that very soon we're going to go back to that big cocaine-fueled party of easy money and people just throwing stuff around, freaking YOLOing and just throwing caution to the wind, you know, if you think we're going back to that soon, well, then okay, maybe take a 3-year sample. But if you want something that's a bit more realistic, I think that 1-year sample is what you're looking for. And so that's going to wrap it up here. Subscribe and hit the bell for more. We have our investing podcast, we have our psychology podcast, and we have the Indicator Profile series. We have something for everybody. And the way the schedule is shaping up, it looks like we're also going to have episodes during the holiday season. Very exciting. But don't let your testing and your trading fall behind. A lot of people take the holidays off. We don't, and you shouldn't either. So go get it.